Welcome, and thank you for tuning in to ESG Talks, a KBRA podcast series focusing on environmental, social, and governance, ESG. This podcast series highlights various ESG hot topics and includes commentary from prominent voices within the ESG community. In a previous episode, we discussed the European Central Bank's ECB Digital Euro initiative and its potential impact on market infrastructure, banking, liquidity, and security. Today, we're shifting gears to explore this topic from KBRA's perspective. We'll dive into the risks, opportunities, and implications of a central bank digital currency, or CBDC, from a credit and macroeconomic standpoint. Joining me today is KBRA's European Macro Strategist, Gordon Kerr, who will share insights on how KBRA views this digital transition. Hi, Gordon. Welcome back to ESG Talks. Before we dive in, could you briefly introduce yourself and your work at KBRA?
Yeah, thanks, Arianne. It's great to be back. I am, as you said, the European Macro Strategist here at KBRA, where I focus on key economic developments and their impact on credit markets, financial institutions, and broader economic stability. A central part of my work involves monitoring monetary policy and market trends, including developments like the ECB's digital euro. I also have my own podcast called Credit Compass and a newsletter where I highlight the recent developments and analyze their impact upon the markets.
So let's start with KBRA's stance on the digital euro. In your view, does this initiative enhance financial stability or does it introduce new risks that should be carefully managed?
Yeah, that's a great question. I mean, from KBRA's perspective, the digital euro presents both opportunities and risks. On the one hand, it could improve payment efficiency, enhance financial inclusion, and provide a reliable alternative to private digital payment systems. On the other hand, it raises concerns around liquidity, disintermediation of the banking sector, and operational risks associated with a central bank digital currency. I mean, if not carefully designed, a shift towards CBDCs could lead to unintended consequences, such as bank deposit outflows in times of stress, or impacting on the traditional banking model and financial stability.
So you mentioned banking risks. One concern raised in policy discussions is that a widely adopted digital euro could reduce bank deposits, affecting lending and financial stability. How does KBRA assess this risk?
I mean, this is a critical issue. If consumers shift a significant portion of their deposits to digital euros, banks could see a reduction in their primary source of funding. That, in turn, may constrain their ability to lend, especially during economic downturns. The ECB is aware of this and is considering holding limits on digital euro accounts to mitigate the impact. However, the effectiveness of such safeguards remains to be seen. From a credit perspective, banks that rely heavily on deposits for funding could face challenges, while those with diversified funding models should be more resilient.
Beyond banking, let's talk about liquidity and monetary policy. How could the digital euro influence the ECB's ability to manage liquidity and economic stability?
A central bank digital currency could provide the ECB with more direct control over money supply and interest rates. It could also improve the transmission of monetary policy, particularly if it allows for programmable payments or variable interest rates on holdings. However, it could also complicate liquidity management if demand for digital euros fluctuates unpredictably. During crises, people might flock to digital euros as a safe haven, exacerbating liquidity shortages in commercial banks. These are risks that central banks will need to carefully navigate.
Another key debate is how a digital euro interacts with private sector payment systems. Would this currency compete with existing digital payment providers, or does KBRA see it as a complementary tool?
I mean, in reality, it's a bit of both. The ECB envisions that the digital euro, from their perspective, would actually complement cash and existing payment systems and not replace them. However, it could disrupt private digital payment providers, particularly those that currently dominate cross border payments. If the digital euro offers lower transaction fees or improved security, it might attract users away from commercial payment platforms. That being said, a well designed system could also drive competition, potentially reducing costs and improving efficiency in the digital payments landscape for individual consumers.
A major theme in our last discussion was security. Given rising cyber threats, does KBRA see the digital euro as a more secure option compared to existing payment systems?
Yeah, I think security is actually one of the key selling points of a digital euro. A central bank backed digital currency could be more resilient against cyber attacks than fragmented private sector payment networks. However, centralizing digital transactions also creates a high value target for cyber criminals. Additionally, privacy concerns remain a significant issue. If users believe the digital euro compromises their data security, then adoption may be slower than they had originally anticipated. The ECB has stressed that privacy protections will be embedded in the system, but it is an area that will require ongoing vigilance.
Stepping back a bit, let's talk about the global implications. How does KBRA view the ECB's digital euro initiative in the context of global CBDC developments, particularly with the US and China exploring their own digital currencies?
Yeah, of course. I mean, Europe is not alone in this race. China has already launched pilot programs for the digital yuan, and the US is still exploring its own options. Not to mention the suggestions of the potential official use of private platforms by the US President Donald Trump. From KBRA's perspective, the digital euro could enhance Europe's strategic autonomy in payments, reducing reliance on non EU payment providers. However, cross border compatibility remains a challenge. I mean, if different CBDCs operate in silos without interoperability, then global trade and finance could become more fragmented rather than more efficient. This will be a key area to watch as the CBDCs continue to evolve.
And finally, where do we stand in terms of implementation? When can we expect the digital euro to become a reality?
Yeah, the digital euro is still in its preparatory phase. The ECB has outlined a multi year roadmap with legislative discussions ongoing in the European Parliament. If approved, we could see a pilot program by 2025, 2026, with wider implementation potentially by the end of the decade. Christine Lagarde, in her most recent ECB press conference, mentioned the digital euro as a key platform for them. However, political and technical challenges could still delay the process. The key question remains whether the demand for a digital euro will justify the effort required to launch it.
Thank you to Gordon for sharing KBRA's insights on this evolving topic. This concludes our episode. Please email esg@kbra.com with any questions or comments. We also encourage you to visit KBRA's ESG website at esg.kbra.com, where you can find ESG research related to the topics discussed in this episode, further details on KBRA's ESG approach, and other ESG related media items. You can also join our mailing list to access our ESG Weekly Roundup newsletter.